Everyone, it's time for a bit of an intervention video because this we have the first truly bearish situation in quite a long time. The last bearish setup that was had potential for flush was this one, and we did get it on December. It's been almost 8 months since that time, maybe 9 months, 9 months. And let's talk about why it is so. Uh, so we have this situation in which the market tries to go higher and that gets strongly rejected down with a big engulfing candle or just a big candle in general. And they're quite common since the from the bear market standpoint. I'll use the most visible ones. One of them is this one. Like if I reverse it, just imagine this is the red ones are green and the green one is red. This is a reversal candle. And even though we kind of retested the zone, it was a bullish signal and it went up afterwards. Then we have this one, lower high, tried to go back higher, got rejected, and when we lost the low, we had a flush down. This is the key point when you lose the low, you have a flush down. This one here, we tried to go up 3% up, then countered 355. We lost the low, we had another leg down. Um, this one very similar to it, but a minus 4% candle. The difference is that with this one, the lows held. And because the lows held, it was a bullish counter move. The holding are a big thing of this. Another one tried to go up, got rejected with a huge ass engulfing candle, took out the lows, and we had another leg down. It continued for a while. Same thing here. This is actually a much bigger candle than it seems. It actually starts from here. So it's almost a 4 point, what, 3 candle. And again, we lost the lows, then another leg down. This is another bullish reversal candle as a signal, a reversal candle, and we went higher. And the last bearish signal we had was in December, like I said, in which we went up. This was a green candle after at the end of the day, like a positive candle plus 0.76. And this one is very, very similar to the Nvidia one from yesterday. And we got rejected, follow through, lost the lows, flush down, and so on. And now we have another setup similar to this one, similar to this one, similar to this one, and this one. And I'm pretty sure we will retest the lows at 433. If those lows do not hold, we have another leg down, and the target is this, like 406, but also applying the potential range for it. I think it's in this area between 414 and 406 if we lose the lows. And this should happen very quickly, like you see this, right? It bam, 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 3, 4 days. So by end of next week, for sure, if it happens, and it has to start today. Like we cannot see a bounce or the lows holding. So you keep watch the lows like a hawk. If we lose them, we probably backtest them, and I'll show a couple of examples of what can happen as well. Don't think any bullishness today is necessarily a good sign because they often do like a backtest. You see this candle here? Uh, we went, so not this one, the other one. We went up, we went down, went up, backtested the midpoint, basically got rejected, and then closed the candle red and had continuation down. This can happen as well today. Look out for it if we get a retest. And the green ones as well. Like this was backtested the midpoint of the candle. It went up, then got rejected. It tried to go back down again, and then got rejected, and we moved up. So this is quite possible. Look for this potential push up again that gets rejected. In our case, it would be 441.04, like this. This would be the level to look out for. And we don't need to zoom in, but you can see here we got rejected from pre-market at the Q3 midpoint. Then we went through the Q3 open like it's nothing. This is a typical rejection of the Q3 open. Overshoot above the Q3 open and get back below the Q3 open. I told you guys that losing back the Q3 open is extremely bearish. We get the retest of the lows. If we lose the lows, full bear run scenario. And on top of this, it was a rejection at the combo of the 50 MA and the 20 MA. We didn't even get the 20 MA, but I'm still counting it because it is very close. But we got rejected after 50 MA. What signal of bear scenario? We went up, didn't even reach the 50 MA, but we still count it as a rejection to the proximal level. Uh, here, 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 we overshot but still got rejected and went back below the 50 MA. Didn't even get to the 50 MA. This was okay. What else? Rejection by 50 MA. The idea is getting rejected at the 50 MA and the 20 MA is not a bullish sign, and it's quite scary. On top of this, we have Nvidia, which did not behave as the previous gap up. I told you guys that I'm expecting a fade, and we got it, and to look for 470 as the bounce, and target if we get a bounce is 580-ish. Target if we don't get a bounce is 378, 380-ish basically. Okay, and why it's a problem? Because we basically had a slow bleed and a flush at the end of the day. Uh, the previous gap up, we went up, it tried to go down, and it found buyers immediately. Like it didn't even go to halfway to the gap to fill it. We found buyers immediately and then bounced and just kept getting higher. But yesterday, literally no buyers. The scenario in which I wanted to see a retest of the gap was a much faster one. Like I would expect something like bam, go down, and then V reversal, be bullish all day, maybe close 500 because it's a psychological level. But we didn't get that. We kept seeing lower highs, lower lows, and at the end of the day, we even closed the gap. We had a negative day. So this is not bullish. This is more like a slow bleed scenario, and I would expect more consolidation out here for a bit, maybe even a shallow bounce back to this area here, this high, like this, and then which is a lower high, and then go back here, lose it, and start another leg down. So with both Nvidia looking not bullish and the market looking not bullish, and JPOW speaking today, we are in a JPOW saver scenario. The first time we have a truly bearish setup in quite a long time, since the last 8 months. Uh, Not saying it's the beginning of the next bear market, but at least fucking hedge because we could see another 5% drop in a couple of days. And for the bear market scenario, this is not it. We are in this area, equivalent to this area. So let's say we actually get the drop uh, to the target area. We will drop 100% bounce from here, a substantial one, because we will be extremely oversold. Maybe let's say we get back to this level 446, 440-ish, uh, then probably get rejected, do a retest of this, maybe get a higher low or something, or basically this over until October, basically. Now, this is the key level. If we may break down below this, we get another leg down, we may even go to 360. We may. But it's also possible we bounce, do a double bottom, and then start and go up and make new bull market highs. Mm, Don't even talk about this. This doesn't exist in our world. There's a lot that needs to happen before we get there. If we get this flush here, we get the bounce for sure, and then we look what happen. We look for a rejection when we get back in this area. And if we get back in this area, I'll look for either a bounce or a breakdown. That's it. But for now, uh, oops, for now, the bullish setup is likely, bam, get rejected. So watch for rejection at 441. Didn't want to do this. Watch for rejection here, or at most at the Q3 open, and then we go back here. If we lose the lows, it will flush down like crazy. That's it. Okay, hope it helps. Good luck out there. Have a good one. Bye bye.